I've been in the space now about 7 years. 5 years professionally, 7 years as an investor and miner. And I've seen a lot of change. It's pretty crazy when we got started way back in the day. My first meetup group I signed up for had 2 people who registered, myself and another person. And unfortunately, I was the only person who showed up, so I had a very lovely conversation with myself. And now it's a global movement. I was most recently in Mongolia, which is a really interesting place. It actually has 2 of the statistics you probably don't want to have. First, it has the worst traffic in the world. The traffic system in Ulaanbaatar is built for 100,000 people. They now have about 1.5 million in the city. So it took 3.5 hours to fly from South Korea to the airport in Mongolia, and it took 4 hours to go from the airport to my hotel, which was 20 kilometers away. And that wasn't even rush hour. That was like an average day. So it was very soul destroying. The other is that the air quality in that country is just terrible. During the winter time, people come in close to the city and they live in these gurs and they burn tires and coal to stay warm because it could get down to -50. Imagine that, tires in a valley area during the winter, so the air stagnates. So the asthma rates are very high. It's not so good. So why was I there? Well, there's a great cryptocurrency community in Mongolia, about 5,000 people, country of 3 million people, 900,000 nomads, 30% of the population, and there's 5,000 people in the blockchain group at Ulaanbaatar. I was in the countryside, and I saw this lovely herd of camels coming by, and it turns out the guy who owns the camels owns Bitcoin. No joke. It's a pretty amazing thing. So we've gone from 2011, where there was 2 people, and I was the only guy who actually showed up, to a camel herder in Mongolia owning the cryptocurrency. That's not bad, wouldn't you say? I think we've made some progress. Okay. So when we started a long time ago, way back in the day, we were talking about competing currencies and payment systems, and we looked at things like Bitcoin as money or something like that. The big debate was, will Bitcoin kill the dollar? That's what we were all talking about. You know, what will happen? You know, when will it become the new world reserve currency? And there was a lot of monetary competition. We had a lot of ideas like Freycoin. Anybody remember that? It was demurrage. It would deteriorate a little bit every year. We had deflationary policies, inflationary policies, these types of things. But the real sea change for our space was, I would argue, the ICO revolution, because this was the first time that people realized that they could use cryptocurrencies as a way to raise capital. They said, wow, I can ask for money and random people over the internet are going to give me money. That's pretty cool. And the first attempt at that, really that was successful, was Mastercoin. And that was in 2013. And I remember JR is the guy who did it. He was using his mom's computer, raised $500,000 in 1 month, and he's like, oh my God, I have $500,000 on a computer. What do I do? He didn't even have a company. So he had to go and quickly retroactively set up a company. So a long ways from the ICO revolution of 2017, where now billions of dollars of capital have been raised. And we're starting to confront the realities of raising so much money and the realities of where the space has gone. And what's happening is people are talking less and less about ICOs this day, and more about the new 3-letter buzz phrase, STOs. And that will be the topic of my presentation. So what the heck is this STO all about? So let's go back to Mongolia as an example. Why does Mongolia have the worst traffic in the world? Well, they have the worst traffic because they have a terrible, terrible urban layout. The city wasn't designed for the population that they have. It just kind of organically grew to that, like many of the world's metropolises. If you've ever been to Jakarta, it's the only place I've ever been with a motorcycle traffic jam. No cars, just mopeds and motorcycles, couldn't get anywhere. Well, how do you fix it? You go and you build an urban system, right? Like a metro, subway, or you redo all the roads. Sounds pretty logical. Why don't you do it? Well, it costs billions of dollars, and coordinating on that scale is quite difficult, especially for smaller countries. And where do they get the money from? Usually they have to issue things like bonds, like municipal debt. Okay, so we had some discussions with the Mongolian government. We talked to the Minister of Foreign Affairs. We talked to their version of the Securities Exchange Commission, the FRC, and local leaders and politicians on the ground, and they all expressed the same desire. We'd like to raise billions of dollars to go ahead and pay for a new traffic system. We said, that sounds great. And they said, well, can blockchain solve this for us? We'd actually like to issue debt direct to the consumer. Take a bond and turn it into some sort of a token and issue it. And we said, we actually can do that. And you can even pay the payments directly to the person and all kinds of creativity there. And where it gets really cool is that you can layer financial products on top of each other. So Mongolia also has huge natural resources. Lots of gold, lots of aluminum. And right now they sell it to Rio Tinto and to China for 2 cents on the dollar, 3 cents on the dollar. They're getting pretty screwed on these deals. And they're very corrupt. So what if you could take municipal bonds for the city and you could go ahead and tokenize them and then collateralize them with natural resources backing them. So if they default, you get the gold or something like that. And they have this wonky law in Mongolia that the natural resources belong to all the people in the country. So when you collateralize these types of things, you also make sure that some of the capital raised goes to the nomads in the wilderness. And every one of them has a digital ID, and they all have wallets. And you can directly issue the bond, and you don't even necessarily need to use some sort of broker-dealer. You can just do it straight to consumer. And it really cleans up your achievement, really cleans up a lot of your processes for you. So that's one conversation that we had. And maybe it'll progress, maybe it won't. But it turns out the very same technology we were working on 7 years ago, and we were working on with Ethereum and what we work on with Cardano, allows us to do that. And it allows us to do that at a scale and cost that is extremely low. You need markets? Well, you got a marketplace. You need global customers? Well, you got global customers. They're all just there. And that's really the magic of this whole notion of STOs. I'll give you another example. I was over in Ethiopia. I was in Addis Ababa. Ethiopia is a pretty cool country. I love coffee. I'm a mathematician by training, and if you don't like coffee, they kind of pull your math license. They kick you out. It's a pretty amazing place. Well, Ethiopia has 100 million people, and they have lots of entrepreneurial people. 70% of the population is under the age of 30. And because they don't have a lot of jobs, they just tend to create them. So those people have 3 to 4 times the entrepreneurial rate of the US population. 3 to 4 times more likely to set up a business than someone US. So you know what that means? It means that there are going to be tens of thousands of successful businesses in Ethiopia over the next 10 to 20 years. And you say, wow, high growth emerging economy, tens of thousands of successful businesses, how do I invest? Well, you can't. They don't have a stock market. It's really hard to put money into an Ethiopian company. And how do they get liquidity? Well, they have to leave the country. They have to go ahead and pull the company out of Ethiopia and put it into South Africa or some other place, and that's where they do the IPO. So what if, instead, we could take the equity of the company, of an SME, and tokenize it, just like you did the ICOs back in the day. Take those shares and say, this share happens to be a security, and just sell it on some sort of global market. I say, oh, Charles, they'll never go for that. Well, you know, the prime minister of that country is a cryptographer. He broke codes during the Eritrean War. He understands more about this technology than sure as hell Donald Trump does or anybody else. He's a smart guy, very talented guy. And so we've started conversations about, can we create some sort of parallel securities market in the country, because the political reality is a traditional stock market is very controversial there. But they're open for cryptocurrencies. So these are the conversations that my company has been having over the last few years as I've gallivanted around the world. This year alone, I've gone to 27 countries. The last 5 years, I've gone to over 50 countries. And when you look at the developing world, there's a huge appetite for tokenization. There's a huge appetite for applying this technology to try to take locked up value, locked up wealth that these countries have, these people have, and unleash that wealth into the global marketplace. Now, what's exciting about this is the closest bridge we have between the work that we've done in our space and the legacy financial world. Because when you go from a cryptocurrency to a security, there's all kinds of things there. There's insurance and custodianship and broker-dealer and these types of things. And every one of those components already has very well-defined business logic and a regulatory structure behind it. Many of you have studied these things and understand these things and spent your careers and your lives in these things. So we don't throw them away, we keep them. And what's exciting is to find out, how do we take what we've done in the cryptocurrency space and make your life better, make your life easier. Like, for example, I run around Africa. One of the reasons why we don't have financial inclusion is it just simply costs too much money to go through compliance for most people. KYC and AML is a nightmare when you can't trust the breeder documents and you can't even trust the jurisdiction the person happens to live in. So what if we could revolutionize the KYC AML system? What if instead of saying to the MSB, you take all the data, you hold it, you verify it, and watch all transactions, and if there's a problem, you're the one liable for filing a suspicious activity report. Why don't we set that notion aside and change the whole system up on its head? We go to the person who wants to do business and say, you put your information in a data warehouse, encrypted, so the warehouse can't see it. And it's your decision of who's going to authenticate that data. So you can go to anybody you want, KPMG, PwC, Estonia, your local government, and then you can open that up. They can look at it and sign it. Then, here's what happens. When you want to do business with an exchange, you send your transaction to the exchange. And it sits in pending. It doesn't clear. The exchange instead says, where are you from? And pulls up and plays a game of 21 questions. They pull up a library of different questions about your jurisdiction, and they just start querying that database with zero-knowledge queries. They don't even have to necessarily decrypt the data, and they'll just get yes, no answers back, and they just keep doing it until they get enough certainty to either clear the transaction or reject it. And they gain no information other than what they've asked, and it's just a bunch of automated microtransactions that occur. Sounds pretty interesting. Then you go, why would the regulator like this? Because they have control over the questions that are asked. And you have now a beautiful system for authentication, a beautiful system for storing data. And not only that, you have a situation where the consumer owns their own data, as opposed to the exchange having to hold it as a liability. So this type of innovation is unlikely going to happen in the European Union or the United States. But when I'm talking about a cross-border settlement between Angola and Uganda, or Uganda and Rwanda, I sure as hell can make a deal with the central banks there to do such a thing. And the cost of running a system like this is 1 or 2 orders of magnitude lower than the cost of running a system like what we have today. So this is where I think there's a collision of two worlds is going to happen. When we start addressing the realities that these STOs, that these big security markets, when we actually have the courage to say these tokens may be regulated instruments, when those things wake up and start trading, which will happen over the next 12 to 24 months, and it's going to bring trillions of dollars of capital into our space, if anything, just from portfolio reallocations from traditional financial institutions that are looking to invest, and we combine that with all this new technology that we've developed, technology that allows us to get a much better understanding of the business logic and relationships between people, a much better understanding of privacy and protection of privacy, a much better understanding of who someone is, the authentication of people, consent, these types of things. So that's the type of stuff that we tend to work on. That's the type of stuff we tend to think about. And that's the type of stuff I think is going to be most meaningful to the world. Because at the end of the day, if we pull this off, we're not talking about American markets or Swiss markets or Chinese markets. We're talking about global markets. We're talking about markets where it doesn't actually matter who you are, what language you speak, where you're born. All that matters is, what are you actually bringing to the table? If somebody comes to you and they have a deal, it doesn't matter if that deal's in Addis Ababa. It doesn't matter if that deal's in Mongolia. What matters is the merits of the business, the merits of the person. And all these people will have access to the same tools, the same investor base. They're going to have access to the same marketplaces. There's never been a time in human history where this has been the case. It's always been a game of the empire and the people who live outside of those realms. It's always been a game of the kings. It's always been a game of the hierarchy, where some group of people tend to be on top and the large group of people tend not to be. But now this is the first time in history where it's bottom up. Second, we now can actually just print our own money. You know, we've been doing this for a while, but it's been restricted to a certain class of people, either large companies, you know, like airline miles, these types of things, or governments. Now everyday people can just go and create their own money. You know, Switzerland was one of the first countries where people decided to start doing that. The Swiss Veer, and it's been around for a while. And you know, in the United States, we had private currencies all during the 19th century. Problem behind all of them was that you had to trust a central entity. Now, you don't. You can trust a federation, or you can even make these things very decentralized. So the tech is definitely changing the world. We are seeing real-life applications emerge. The scientific volume of papers. Another advantage of my company is that we're a large research firm. We have 3 labs, one at University of Edinburgh, one at Tokyo Tech, and one at University of Athens. So we get to have our finger on the pulse of the science side. Every year, the amount of scientific papers published in this space about doubles. And it's really remarkable, damn near exponential growth. And we are seeing thousands of scientists entering the space doing interesting things. Just the other day, Silvio Macaulay announced that he got $62 million in funding for a venture called Algorand. Who the heck is Silvio Macaulay? You know, we always say zero knowledge proofs. Well, he's the guy who invented it. He's a professor at MIT. He's a Turing Award winner, and he's also one of the smartest cryptographers alive. And now he's armed with a war chest of over $60 million to compete with me and to create great technology and bring it into the space. It's not the only one. There's the Avalanche protocol that Amin Gunsir and his team are working on. You have protocols like Thunder Token that's coming out of Cornell. And there's a dozen more. Concordium is the latest. It's a KYC AML blockchain. It's actually being built partly here in Switzerland by Uli Mara. He's at ETH Zurich, along with Jesper and Yvonne Damgaard at RS University, which is one of the top schools in the entire world for cryptography. That team alone has probably published more than, if you add all their publications up, 1,000 papers, and their students combined, 1,000 papers. We didn't have that 5 years ago. We have it today. What does that mean? It means that internationally, we have a global movement of scientists, graduate students, postdocs, writing open source papers usually, open domain papers, creating protocols like wild. I was up in Canada. We were showing off a paper at CCS. It's a major cryptographic conference. And we presented our paper. Right after us, Visa Research presented their paper, something called Rapid Chain, where they developed a consensus protocol that runs at 8,000 transactions per second, and it's really well designed. And they had money from all over the place. Visa, Definity, which is a Silicon Valley venture. I think the NSF was involved. DARPA may even put some money into that. It's pretty amazing to see the diversity of funding. So that's a good signal that despite the bear markets and despite that we've had a little bit of a recession, which Twitter constantly reminds me, that the industry's best days are ahead of it. We have real problems to solve. We have real protocols that can solve these problems. And the people who will do these things will probably end up being people in this audience. See, that's the last point. This isn't my movement. It's yours. It's always been yours. I didn't ask permission from anyone to come into this space. I didn't ask anyone, hey, can I be a cryptocurrency entrepreneur? I just started doing it. I just wrote some courses up and started talking to people. Then some people gave me some money, and I said, okay, let's go do something. And there's no difference between you and me. You see, most of our core technology is open source, it's patent free, and all it really matters is where do the problems live and how do we solve those particular problems, which you know better for your community and for where you exist. You know, it wasn't too long ago that Switzerland had no cryptocurrency businesses. Ethereum was one of the first. Now Crypto Valley has well over 100, and there's billions of dollars of capital here. This is a pretty conservative country. Yet it opened itself up, its regulations up, and its population up. And we're seeing that same kind of growth everywhere. So anyway, thank you all for coming. Thank you all for listening to me ramble for a little bit. And I'd like to close by saying I think our best days are ahead of us. And I think our industry is going to continue growing. And STOs are probably going to be the next big wave. But there are many to come. And I'm happy to take some questions because I have just a little bit of time left. Thank you. Any questions? Show of hands. And I have a chest cold, so I'm all sad. Oh, we got one there.
Hi, awesome presentation. Thank you very much. Could you please elaborate about the KYC MAL blockchain from Zurich that you mentioned?
Yeah, it's called Concordium, and they just released their white paper, and it's based on a lot of peer-reviewed research that was done out of ETH Zurich and Aris. Lars Seier from Saxo Bank was the guy who set up the venture, and Lars lives here and in Denmark. I'm not sure exactly how this system comes together because I haven't seen the source code for it yet, but it apparently is some sort of KYC AML system that can preserve privacy but has a regulatory component to it as well. And so I look forward to doing diligence, but the team is extremely solid. Van Damgaard and Uli Mara are considered to be two of the strongest cryptographers in the world. So if they're on anything and their name is on it and they're actually doing work, which they would be if Lars is connected, and Lars is a billionaire. Saxo is quite large. He was like the Goldman Sachs of Denmark. So highly recommend looking into it, but I'll have to punt on it. Next question.
Hi Charles, beautiful presentation. Back to the point of government-issued bonds collateralized by natural resources. Assuming this bond defaults on a specific bond, how do you enforce the underlying asset being switched to, for example, I'm sitting here in Zurich, I invest in a government bond in Ethiopia, they default. How do you make sure that I'm able to get the gold?
So you do that through disintermediation. So you don't actually have the consumer directly show up to Ethiopia with a shovel and say, can I go mine your gold now? You sell that or get somebody to insure that in the resource business. So basically if defaults, Rio Tinto would come in and take it, and then Rio has to cover the bond as the collateral.
Thank you.
Unless you want to show up to Ethiopia with the shovel. Next question. Come on, guys. Keep it lively. Yes.
You briefly mentioned Estonia as a place for regulation. What do you think about it?
Estonia?
Yes.
Yeah, well, they've been pushing e-governance for a while. It's, you know, when you're a small country, you have to work really hard at being able to play on the global spectrum. So you have to innovate, you have to move quickly, you have to open yourself up. I mean, Singapore played that game better than most. So Estonia is basically pushing for e-governance. So things like online voting and government services that are easy to access through the internet. And then when blockchain came around, they said, ooh, we need some of that. And so they've been definitely moving in positive directions. And they've tried a few things, like that ID card that they've had, although they've had some security issues with it from time to time. And I think that they're just one of many. And what's going to end up happening is, unless they continue to move quickly, there's a lot of other small nations that are going to offer even more compelling things. I'd actually watch out for Malta over the next 24 to 36 months. I think they're making great inroads. But in general, what can a government offer? They can offer a safe harbor for cryptocurrencies. So they can say if you want to do an ICO or an STO, it's legal. They can offer you tax certainty. They can offer you banking certainty so that when you incorporate there, you get a bank account. That's been historically a big problem for our industry. And then they can offer you kind of ease of doing other professional services, like getting audited. For a long time, it was hard for me to get a unqualified audit because it was just, you know, they say, oh, you have crypto on your books. We can't qualify that. You know, so it took a little while to convince the big four that it's okay to have cryptocurrency holdings, but we got there. So they can offer these types of things, clarity on the legal and regulatory side. Then there's government services like digital signatures are lawful, so you can sign with that. And then take it a step further, evidence on a blockchain is admissible in court, and also contracts on a blockchain are recognized in the jurisdiction. And we are actually seeing that occur not only in small European jurisdictions, but also United States and certain states, like Delaware has been talking about and others have as well. Wyoming recently passed some laws. So these are the kinds of things that a government can do to create a nice business environment for a blockchain company. Moving beyond that, they can actually put in money and actually provide subsidies as well. Either on the research side, like the NSF provides grants and DARPA is providing grants, or they can provide it on the entrepreneurial side, like a sovereign fund putting money in. And we haven't quite seen that yet, with some notable exceptions.